All right, so it has not always been chance to um to join the classes due to his 9 to 5 job timing. So that is why we are taking it upon ourselves. Cost a lot to register with Google Class to be able to run class for more than an hour. So it's about $200 for you to be able to own an account to run um, paid accounts with them. So I, if not, they wouldn't have allowed recording on their platform. So please, I would like us to sit on this knowledge. Don't see that some paid discount price, some paid full price, some paid relationship price. All of these things are still comes at a value, no matter how much you pay. Even if you paid 20,000 naira, you are paying a value for it. So be sure that you are getting the value of what you paid for, even if what you're learning is more than what you paid for. Still, make sure you are getting the value of what you paid for, and it's my own joy that at the end of it all, we are all making our money. By next week, I'll be inviting a young guy. I think by next week or probably when we start our ICT class, I'll be inviting a young tutor to just share his experience with us. He's a young guy of an under 18 guy, and the guy is a millionaire in dollars already. When I mean in dollars, the guy is doing well on himself. He's just under 18 and he's doing well. I have one of them here, but he's just growing. God has not taken him to the realms of millions, but he will be taking us in one of our classes. I guess, okay, this weekend I will be in a business meeting. I'll be in a business meeting. So I was planning to have a revamp class with us this weekend with one of my one of my youngest students. So the guy, when you teach somebody and the person is even beginning to go wilder than his mentor. So the guy is doing well, and I would like us to share from his knowledge. He went far and wide, and he has paid for a lot of resources to be taught, learned. So he will be sharing with us, not this weekend anymore. We'll be looking at another weekend to come. But one of the weeks, this next coming week, I'll have a young guy with us to share his knowledge of ICT. It's very versatile in it, as I am. So it's always good to hear from. It's always good to eat from different plates. So this guy I'm bringing to us is an oil well. The guy is really rich in forex. So I would like us to ensure that if you want to grow yourself, be sure that you are attentive and you attend his class and many other people I will be bringing on board. I have one of my mentors too in the UK. I'll be bringing him on board one of these week. He'll be speaking with us as well. I also have one of my friend that works with UBA. He doesn't work as a staff. He doesn't work as a, but he trades for UBA in the bank. So he's one of UBA's trader. So um, and I'll be bringing them. Lots of these people I'll bringing them. So I'll bring them on board to speak with us as well. These are the people that when I started my forex journey, Mr. Toby, it was the one that gave me the insight of how the market and all of those things before I was still young in forex, and it was like, Francis, don't worry, you're gonna get it. And today it's just like yesterday actually. So he'll be with us as well. My mentor who introduced me into forex when I finished my service year that year, and I was almost finishing though. So I was looking to invest my savings from my service year. So I went to him. I was like, Francis, no, I trade from 5 million up. I said, like, seriously, sir. So I was like, don't be bothered, come to my office. So when I got there, I was like, he handed me over to someone and he said, like, train this guy like we are opening another branch in Lagos. And it was just like a prophecy then. So he said you should train me like we are opening another branch in Lagos. And here I am. I'm a branch of myself. And I'm in Lagos actually. So it's prophetic, and it's just the beginning of the journey actually. So he will be coming on board as well, live from UK. So I pray I'm able to get I actually had a date with him, but then due to some things that's been because he's a pastor as well. So I'll bringing him on board as well. So it has the potential to teach us, to give us, even if it is just a word of advice, maybe not class in exponential. Yeah, no, all these big men now, they can't sit to do something for a longer hour. So let's just hear from him. And like, so we have like 3% to 4% that will come on board to share knowledge with us during the course of this training. And I want to believe we'll value it as much as it should be. So I want to believe we'll value it as much as it should be. I mean. So without wasting much of our time, uh, okay, so let's dive into the class. So the past few weeks we've been doing quite a number of things, and we have been okay. All right, so please, if you are seeing the screen, put number one on the chat box. If you are seeing the screen, put number one on the chat box. All right, sorry about that. Our last class we explained. Please, you can just give us can dive us back to what we've had in our past class. We've had two classes now. Sorry, the video will be coming up today. You know, it's a very long video, so it takes time to upload. Sometimes the upload is always canceling, and all of those things. So I mostly do it in the midnight. So hopefully today the second video will be ready on my YouTube channel, so it will be available for us to watch. And I don't know if Mr. AY is here. He's also no chance. Okay. Favor, please, you can help me check up on David. Perhaps he's free to join the class. I don't know. So let him just know. Thank you. And hey, I guess, Mr. Favor, I will make an admin now. You help me add up Taiwo. Mr. Taiwo. It escaped my mind. Sorry, guys. Okay, it's alright. It's alright, no problem. Sure, just let me add Taiwo on the WhatsApp platform. Let me add it all there. Yeah, so. So we did technical analysis, and we had a little graphical explanation of the market. We had a little graphic explanation of the market. So I just want to have a little previous knowledge of what we've done. So last week, we were explaining a few things about demand and supply and all of those things. So this was the graphic representation we had, how price moves like roller coaster. Price buys to a level, retests to this level, and keeps doing the same thing, like a repetition of like a pendulum. It keeps repeating the same thing over and over and over and over and over again until it can no longer what repeat itself again, then probably change the course of direction and all of these things. And remember, I explained how they are being influenced fundamentally. So if you are confused in this class, I need you to go and watch the first class. Be religious with it. It is just less than, I think, at maximum 1 hour. It's not up to 2 hours. It's just 1 hour, few minutes. So watch it. Once you watch it, second video will be released, and today's video as well will also be released to the platform, to my YouTube channel, so you can all watch. For those that have no chance of in our past classes. So this what we just explained. Actually, it was a very long class. Was to just cap it off, we explained structures and how the market moves with demand and supply and all of those other requirements expected in the market. So now today we'll be doing candlesticks before we're now diving into structures. So there's what we called candlestick patterns. We have what we call candlestick patterns. We have what we call candlestick charts. Now the representation of the market is being represented um as candles, and this candle was it was how will I say, it was discovered by a Japanese man who happens to be Yuan Chan or so. He was named Chan was in his name. Is in his name rather. He was one that discovered how we can represent the movement of the market in candles, and now we can how we can read. Before now, charts and markets represent themselves in line format, in line charts. Do you get it? Line markets always representing itself in a line chart format. For example, I'll show us something here. Okay, yeah, this. Now, if you look at this chart, you realize that this chart is moving in the form of lines. I don't know if we're seeing this. This market is moving in lines, and in the past, this is the way market works, where we just get to read lines, and we just get to read the demand and supply of market by looking at the lines. And looking at these lines now, they are only analytical by structure, but not by candles. But when the candlestick pattern was discovered, that was when we now had the opportunity to be able to read market structure in candles. Such a thing like this. We started having candles, so we can now begin to know the high, the low, the wick, the values, the opening and the close of the market, and how much a candlestick can interpret what is going to happen in the market in the next few minutes or few hours. So this is what candlesticks has helped us in diving into. Unlike before, it used to be line charts. We have the bar chart, this bar chart, but now we have the candlestick, and candlestick is the most commonly used in the history of time and season up until now, and one of which is what every retail trader, institutional trader, investment bank, this is what they all use. Do you get it? So that is the way it works. Now we have that now explains. Sorry, let me switch back to our material. Okay, good. So that explains to us. Now it is stick chart shows the same information as a bar chart. Candlestick chart shows the same information as a bar chart, but in a prettier graphic format. Candlestick bars still indicate the high to the low range with a vertical line. I remember I showed us a bar chart. The bar chart was looking like one single, like representing one. Then we have the opening and the close of the market. But it's the same way as the candle, but the candle is much more better than the bar chart in graphics and in reading of charts. That's what they mean here. However, in the candlestick charting, the larger block in the middle indicates the range between the open and the close price. Traditionally, if the block in the middle is filled or colored in, then the currency closed lower than it opened. In the example below, we found how it works here. Now, we have the candle here. This is the real body of a candle, and this is another body of a candle. So this candle, and now the law of price movement states that the opening of a candle, the close of one candle is the opening of the next candle. If a candle opens here, okay, I think I need to use my writing tools now. Please hold on. Alright, so like I was saying before, now if a candle opens here, if we have a candle reading like this, if a candle opens here, it opens above and closes below. So it implies that the candle opened here and closed below the market, which means it opens here and closed here. It implies that if market opens here and closes here, it implies that the sellers were in charge of this whole candle. I guess I should have used a green marker here. And in this case, if price opens below and closes above, which means the open of this candle was below and the close was above, it implies that it opened at this point and buyers took over up until it closes above here, which means the body of this candle will be green while this opened above and closes below. So this makes this red and makes it sellers were in charge and buyers were in charge here. So whenever a candle opens above and closes below, it implies that sellers were in charge in the candle. And if it opens below and closes above, it implies that buyers were in what? Were in charge in the candle. So that's that about that. Um so that explains this. So now this week here is what we call the week of the market, the week of the candle. Is for example, if um if price opens at this point and buys to this level but before the candle closed, sellers were able to drop it a bit to this level. And note, whenever a candle buys to a level and starts dropping, it leaves what we call the shadow. It leaves what we call a shadow. That shadow implies that it interprets it that, like, how would I put it now? It automatically tells us, and it's statistically tells us that price has gotten to this level before, but because there was a bit of tussle between the buyers and the sellers were able to pull down price from this region to this zone before this whole candle closed out of the market. So that was what whenever you see any week like this any week in the candle in the market, it implies that market price has pushed price to this level, but due to preferably something that brought the market down, and whenever candles are returning back, it does not return back without leaving a traces that it has been there before. So price will let us know that market has gotten here before, but somehow sellers came down to. So whenever you see a shadow like this, it implies that price went to that level before and started falling. So I will show us a representation in the market of how it works in a smaller time frame, so we can see what I'm trying to explain to us all. Now this is the 1 minute time frame. I did like to use another one. Okay, good. So this is a 1 minute time frame. Now look at it. Candles on this time frame opens in 1 minute. Remember, I said there are time frames as well. We have what we call 1 minute time frame, 5 minutes, 15 minutes, 30 minutes. I would like you to look at the side of my screen here. This is my cursor. So please follow it down to this. So I have my time frames here. So I have 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, 1 day, 1 week, then 1 month. All of this time frame implies that every single candle that opens here, like every single candle that opens here opens in 1 minute. And every single candle that open here, they open and close in 5 minutes. Every single candle that opens and closes here, they open and close in 15 minutes. Every single candle that opens here, they open and close in 30 minutes. And every single candle that opens here, they open and close in 1 hour. Every single candle that opens here, they open and close in 4 hours. So it takes one candle to run for 4 hours before it can close to open another. Then it takes every single candle here to form and close in 24 hours, which is 1 day. And it takes one single candle here to open and close in what? In 1 week, which is one candle for 1 week. So every candle you are seeing here, one candle 1 week. This candle is for this week, and it will close out once it is Friday night. It closes out. This one opens again on Monday. So this closed last Friday. This one opened on Sunday, which is earlier Sunday in the morning. Now, and every single candle that opens here, it opens and closes in 1 year, 1 month. So this candle you are seeing here is a month candle, which means you started this January. Until the end of January, this candle will not close out. So this time frame have their own interpretation, influence, and advantage in the market, which is what I will explain when we get to the intense part of this class. Now, like I was saying, every candle that opens and closes, it opens and closes at a particular point, and opens at a particular point and closes at a particular point in time. Now I want us to watch closely how these candles will be forming, opening and closing. Now if you look at it, let's backtest to the past from, let's backtest from this zone. Let me mark it. Let's backtest from here and see how it has been working. Now if you look at this candle inside this box, the candle inside this box, if you look at it closely, the candle opened here and closed below. That is why we are having red candle, which implies that sellers were in charge. We don't call them sellers like trading terms, we call them the bears. The sellers are the bears and the buyers are the bulls. Very good. So that's why we call it the tussle between the bulls and the bear in the market. Now, so this red implies that sellers were in charge all through, which implies that the price of this candle opened above and closed what? Below. Now, wherever one candle closes is the opening of the next candle. So when this one closed here, the next candle opened at that same level, which implies that this is our opening price. When we had the opening price, you realize that we had a little shadow here. It implies that price gapped down a little bit before it now started going far up. So when it got up, within the space of 1 minute, this candle closed here, which implies that market went right up without coming down back. So you opened here and closed here. Opening price and closing price. This makes it what? A bull candle, which means buyer were in charge for the next 1 minute here. Now look at this very well. This is what I explained earlier. Now when price got here, remember, let me say it in Yoruba. Ibi tí candle kan bá parí sí, like the closure of one candle is the opening. That's good. The close of one candle is the opening of another candle. So if a candle closes at price 1, the next one will open at what? Price 1. So that is what we are seeing here. So immediately it opened, sellers came down, pushed the market down far a bit. But when they did that, what happened again? Buyers came over and they pushed price to the far top to this level. All of this within 1 minute. But before the candle closes, seller brought this down to this level, but they could not take it. Seller, the closing is inclusive. Okay, let me get that right. No. The closing is not inclusive. No, it is not. The closing is not inclusive with the shadow. The shadow can only be regarded as the high and the low. You get it? This can only the body. See, the body itself is the price, not the shadow. The shadow is just like an impression for us that something restricts something restricted price from going further. So the full body is the open and the last body is the close. So now we can now regard the shadow as the upper level, like the peak at which the market went. The peak of this candle was the peak of the shadow, which is, we can call it the higher shadow and the lower shadow. Do we get it? The lower shadow and the higher shadow. But whenever you're analyzing, you have to what? You have to analyzing rather, you have to use it considerably, mostly on higher time frames. You use the wick as well, because the wick implies that price got there and something stopped it. So something must stop the future price from also doing the same thing. Do we get it right? So that's the way it works. So all these weak shadows now implies that price got here, but they struggled to go further. It came down back. And you realize that the second candle opened at the closure of this candle. When the candle closed here, the second one opened and went far and wide to create another bull candle. But at some point, it created a little shadow. So something stopping the market from moving here. So what happened the next two candles? Price dropped. So when price opened here and closed here, another one opened here, closed here, created shadows, opened here, closed here, created shadow above and little below, opened here and closed here above, opened here, closed here, opened here, closed here, opened here, closed here, like that. That's the way it happens. So when a candle closes, another one opens next to it by the same price level. So the only thing that can allow it not to open at the same price level is if there's a very high volatile price, high volatile news in the market that could create something that can be regarded as gap, market gap. So market will now gap from here to come and open from this point. Are we getting it now? Market can, instead of the market to open right to the next, right next to this, it can just gap up and open from here, which is what we regard to as what? Market gapping. So that's what candle wick, high, lows, open and close imply. So if you see it here, this is our open, this is our close, which is the real body. Now this cannot be the close, it can only be the high, which is the highest peak of that candle as of that moment, and this is the lowest peak of this as of this moment. Here is the upper peak of this as of this moment, and there is the lower peak as of this moment. So I want to believe that is well explained and understood, right? So yes, we don't like to use the traditional black and white strategy. So all of this story. So many people wants their candles to be in colors. So this is it. So whenever it opens and closes above, whenever you see anything that closes above, it implies green. If it closes below, it implies red. So there are situations where we can have price do this. I was going to explain something now. Okay. I will try and remember later. So here is an example of candlestick chart for Euro USD. Like this is how it looks like. So I want to believe we're all used to candlesticks and all of these things. So we have line chart, bar charts, candlestick chart. I've explained that to us. So the Japanese candlestick, we can briefly cover candlesticks charts in previous lessons. So what is candlestick? More than 200 years ago, the Japanese were using their own style of technical analysis in the rice market. This style evolved into the candlestick technique now used worldwide. Candlestick chart is as useful as standalone tools. They can be matched with other technical tools to create the ultimate fighting technique. Certain candlesticks combinations may imply a period of consolidation. Others may hint of a forceful price move. Candles are formed using the open, the high, the low, and the close. If the close is above the open, we've explained all of these ones. We've explained this. So now let's take those candles stick one by one. Long versus short. I wouldn't want us to use this one. We'll probably go into candlestick by bar. We'll share the material with us, so we'll do this next class. So let's dive into so we have what we call support and resistance, trend lines, and channels. So support and resistance is one of the most widely used concepts in trading. Strangely enough, everyone seems to have their own idea on how you should measure support and resistance. Let's just take a look at some basic fundamental knowledge. Now, what we are seeing here is what I've explained, but support and resistance is a very important tool in the financial market, but trust me, it is not the only tool to be considered to be used. There are many other tools considerable that can be considered to be used in the financial market. One of which is if you're going to be trading the financial market, you must have knowledge in at least 3 different strategies. Now, support and resistance is just for mostly institutional traders that has high volumes of money trading. Now, there's something we call sniper entry. I sent Did I make any screenshots today? There was a trade I took earlier this morning. Yeah, so the trade was just immediately it picked my pending order like this. The thing just went into profit straight and never to return back to loss, and eventually close out in profit, take profit. Now, support and resistance will not do this for you. Do we get it? Support and resistance only puts you in a district. Now, inside a district, we have streets, and inside the streets we have houses. Inside houses we have flats and rooms. I hope I'm communicating. Please send me a message on the chat box to make sure that I'm communicating. Send. Let me see the number two. Everybody, please send the number two on the chat box. Okay, right? Please, everybody. I want to be sure. Okay, I want more. I want more response, please. All right. So, support and resistance is just like works like it's just like a district. Inside a district we have a street, and inside the street we have no houses, and inside houses we have rooms, flats, and space like that. So if you are trading with support and resistance, you are trading with district, which means you are much more likely to lose a lot of money before you can eventually come back in profit. Do we get it? You are much more likely to lose a lot of money. That is why you will not have a risk to reward ratio using just support and resistance to trade alone. Do we get it? You will not just have, like, if you're trading $100 and you enter a lot size of about 0.02 in a trade, you'll be running like about maybe like $20 loss or $40 or 30, let me say at maximum 20, before you can eventually come back in profit. And on the long run, you might have probably while you are holding the negative trade, you are not emotionally in check. You are just begging God to bring it back for you in profits that you are not doing again. And once you just come back to profit like 0.01, you close just for you to have emotional rest. So support and resistance only gives you the district zone. It will not give you the flat, the room, the corner, the four walls of the same place the market will get to before market can eventually drop. Of course, if you are going somewhere, if I'm going somewhere, there are times that whenever I want to go, I'll step out and I don't know places, I just use my Uber. But the day I don't use Uber, I will merry-go-round, go far and wild, and something like that before I can get where I'm going. Do you get it? So, but if I eventually find myself in the streets that the person sends to me, at least I'll be rest assured that okay, I'm no longer looking for streets anymore. Now I'm looking for the house that I'm going to. So once I'm able to get the house, I'm no longer bothered about the house. Now I am bothered about the flat I'm going to. So once I get to the flat, I know that I'm going to the parlor straight. So this is how the market works. So if you are using support and resistance just alone, you will only be trading within the district. And while you are trading within the district, I'm trying to explain to us in layman understanding so we can understand how support and resistance works. If you are not having a trading strategy of ICT to rally down how you can enter trade with less risk, with a risk to reward ratio calculation. Do we get it? So knowing fully well now that okay, allow this. Sorry, please. Okay, allow this. Yeah, we're doing well. Wow, wonderful, good. So knowing fully well that you have entered price, like let's just say for example, how do I say it now? I wish there was a trade I can use in explaining this. Let's look for one on the trading view. I don't want to mess this up. Don't need any. I should be using this, we don't cancel it. Now let's explain with this. Now, support and resistance tell you this is my support zone, and somebody just begin to buy from here. You know there are some supports that you buy from here like this, and before you know you just see that it just keep going deep, it keeps going deep, it keeps going deep, and which is why because you have not entered, and that is where candlesticks come to play. Do you get it? This is where candlestick comes to play. You see, forex is just like you know, in government there are parastatals, and inside parastatals we have different systems. You get it? You know, like when we have the judiciary, legislative. Under the judiciary, you have a lot of offices. Under the legislative, you have a lot of offices going far and wide. The same thing in forex. In support and resistance, you have so many considerations one has to consider before you can take one trade. Remember, it starts from the fundamental, knowing what is happening in the market. Like this week now, this week is an inaugural service of Donald Trump. So it implies that dollar will be weak because dollar is going to have a lot of engagement. Then from the following week of his inauguration, we should start expecting dollar to get strong. Why? Because Elon Musk is doing one of the craziest thing. Because if you have been watching closely his inaugural speech together, he and Elon Musk has been engaging more on the fundamental space. And Elon Musk is one of the most wildest business conglomerates on the markets today. So he has the potential and the power to push markets to any form and space. You realize he has the power to push Bitcoin any form. You get it? This is, I think this is the second jet they will launch, and yet they were able to catch it back again. So this is a level of achievement in the US economy. So, but while Trump is being inaugurated, dollar gets weaker. Expect all currencies paired gold, euro USD, NZD USD, expect them to buy. And if you look at it from market opening today, let me show us here. If you look at market open today, let's go to 1 hour, 4 hour. If you look at market open of euro USD, market euro USD opened from here this morning. This is the market opening of euro USD today, and this is the present state of where euro USD is. This is the present state of where euro USD is. So majorly, every retail trader should be concerned that once price takes out this high, everyone should start looking to leave the market, because there's higher probability it's going to get here as well. There's higher probability it's going to get here as well. You get it? But this is a very how will I put it now, dicey liquidity that needs to be taken out before price start dropping or whatever it wants to do. Okay, but due to the weakness of dollar in the market, and if you come, I've been able to confirm my fundamental well. If you look at my fundamental now, my currency strength meter tells me dollar presently is weak. Oh, as of when I checked, it was just 1 bar. Now it's getting 2 bar. That's because market is retesting. So euro is the strongest so far. So that's why euro is pumping up. Dollar is very low. So all of this currency paired with gold will be dropping drastically. So this implies and tells us that whenever you want to trade in zones, you need to learn, like we'll be learning ICT trading side, which we really I was explaining to a friend of mine that went to drop me somewhere yesterday, and we were talking, he was showing me his trade and all of those things. So I was telling him his mistake, that see, your mistake is you are trading with indicators too much. Indicators will not give you the right entries. It will only give you endpoint. Yes, it will only give you an endpoint to where the market might start buying from, but it will not tell you at that endpoint. And at every endpoint, there's always a level of at least a level of zigzag. Market must be able to. Now this is an endpoint. Now before the market can decide to do anything here, a retail ICT trader will not just take a sell from me because he's seeing a structure. He's going to take a sell because he needs to wait to see what we call a confirmation entry. Do you get it? There's something we call a confirmation entry. For example, now, if this market breaks below this level, There's something I need to confirm before I can what? Buy it to retest back to this level. But I won't just say because it has broken this level, I will not buy from there. No, it's so shallow for you to have taken that kind of trading condition to buy. Now, market must buy to a level. After buying to a level, it will retest, come back further, test again, then. So once it comes back, once market does this first one, me, I'm always taking my trade from here, but the risk is always high. But most time it is better you wait for the market to do so another one to break out this level here, this high level here, probably 5 minutes or 6 minutes high here. Then whatever market is now coming for, it can mostly might or might not come for the other block here, but might just look for a nearest fair value gap and just what, push from there. Uh, you should look for the nearest fair value gap and just push from there to the top, to the next supply zone. So mostly this is what we call confirmation entry. So you need to get a confirmation before you can decide to take any trade whatsoever. So this is the way, I hope we see this now. So the same way you must wait for confirmation at every supply and demand zone, not just entry. So now this confirmation is what we call the flat itself that you are going to. Now when you know the street, you need to know the house. Knowing the house now implies that you need to do what we call refining of order block and fair value gaps. No, sorry, you don't refine fair value gaps. Now, what we mean by refining order block is by the time you come to 1 hour, if I'm to trade, I hope we see the way Euro USD is pumping up. Okay, I think I have an analysis I'm waiting for here. Let me go to 1 hour. Now, if you look at this, I have a pending order sitting for me here. Now, let me take you to the 4 daily time frame of this. Now look at my 4 hour time frame. This is what I call my 4 hour order block. If you look at this market very well, you will see a structure, well labeled structure here. Now this is a 4 hour order block. Now if you are to object a trade based on this 4 hour order block, it will affect you, and not just affect you, affect your equity. Look at the size of a 4 hour order block. So imagine you take a trade here and you put your stop loss here. Can you see that it is far and wide? Am I communicating with us? I hope you see that it is very far and wide. So in that case, for you not to fall prey for such thing like this, there's something we call refine. But if you have enough equity to hold you up until this point to layer, of course, then you can do. Do you get it? You can do. And you see that I have 2 positions, one at the 4 hour order block and another one at the 15 or 30 minutes order block. So there's something we call refine OB. What does refine OB means? Refining OB means you need to go down to smaller time frame to look for the same OB, the same order block, but in a smaller form. That's why we regard it as what? Refine. You see, in this space, most times it's just always English that mess people up. It's a simple thing. Refine order block means go to lower time frame and look for a smaller order block that will reduce your risk to reward ratio. Now let's come to 1 hour. This is now this space you are seeing here, this O block you are seeing here is for 4 hours. Now by the time we see for 1 hour, we are looking at just this candle alone. So can you see the difference? Can you see the difference of the wideness? So if you are taking trade here and you're putting your stop loss here, it's very wild. So you can just say, let me wait for price to mitigate the 1 hour order block, which is this black hole. Let me wait for price to mitigate it. So what I now do here is, instead of me to wait, I will enter a small lot size in here. So in case price takes it and still go further, then I'll enter my original lot size at this point. Then whenever price is beginning to fall, it begins to fall in your favor. Do you get it? And even if you now put a stop loss, now if your general price entry, your lot sizing is probably one standard lot size, then you can decide to break it into 2 or 3. You can put 0.30 here, put another 0.30, maybe another 0.20 first, 0.30 next, then the remaining left out of that is about 0.50 now. Then you can decide to put 0.50 or maybe in 15 minutes order block or 30 minutes. You come to a lower time frame, look for the order block here. So I'm not seeing a reasonable order block here because I won't regard this small line. Of course it is the order block, but I will not want to work with it. Why? Because the probability of markets coming to mitigate it is not sure. Do you get it? So I'll just use my 4-hour order block and my 1-hour order block to what? To specify and to take my trade, which is why you're seeing my pending order. I'm putting a sell limit there. I'm putting a sell limit here. One for 4-hour order block, another one for 1-hour order block, and my stop losses above my POI. I hope we're seeing that. So that is considered as refining of order block, which implies that if you are going to go to a place, you need to know the streets, which is the zone that you are trading in. But inside every zone, you must be able to have a district. Now your district is you are there, but you don't know how to find your way. So immediately you find the house. Now the house implies that you have refined your order block by finding the house. But getting to the house now, you need to know the flats you are going to, which means you need to wait for an entry confirmation. Don't just enter because you've seen the house. You need to confirm if this is where you are going, which is you need to wait for a confirmation to enter this trade. If this trade is definitely going to sell, I need a confirmation entry before I can get into it. So which is why everyone must be able to learn this strategy. No support and resistance, no ICT, and know how most of this work. But the last thing I'll teach us in this room is indicator, because I personally do not use indicators. So, and I will not patronize it to anyone. Indicators only make you lazy. One, it might give you today, but then the way it will take from you to be so huge and large for you to recover from. So it's better you just wait, sit on your technical skills and learn it while it's hard. So that aside, okay, let's go back to the material before we call it a beautiful day for the day. Now, so I have explained the concept of support and resistance. Now, how do we now spot support and resistance? Support and resistance can be spotted in so many forms and so many patterns. Now, we call them restrictions. When something is supporting you, something is holding you from below. And when something is restricting you, something is restricting you from above. So support is always below us and resistance is always above us. Wherever you are in now, I don't know, you are in your office or in your home, you are in a restaurant, you are in a lounge, you are in a library, wherever you are, there's a support ground, which is the floor they are standing on. And above you is a resistance. If you are outside the world, heaven is the resistance. And the floor and the sand is the support. If you are inside your house, the floor you are standing on is a support, and your ceiling is a resistance. But note that these are dynamic names. When I say names, no. Support and resistance are dynamic. It is not static. It is dynamic in the sense that, now let me draw this. I think I need to use this. So please let me take this out, please. Alright, so Then support and resistance implies that market must have something that have obstructed it from moving at least 2 or 3 times before it can be considered a support. Now, for example, market has been buying and selling and price has been restricting it. 1, 2. Now at this point, we can regard this top as what? Resistance, and this low as what? Support. Why? Because it has occurred twice. At least it has occurred minimum of, there is no maximum to it. At least minimum of 2 restrictions, minimum of 2 highs and 2 lows. And we already have 2 highs here and 2 lows here, which means something will be stopping the market from going up and down. So at the point where you see it stop going up, you consider as your buy zone, sell zone, buy zone, sell zone, buy zone, like that, like that. And the same thing goes for this. So every support and resistance level now has its own trend. We have the downtrend, the uptrend, and the sideways, which can be called the horizontal market or consolidating market. Yeah, I hope you see this. So now I hope you see that. Resistance and support. Resistance. So the top is always resistance, the below support, top resistance, below resistance support. Sorry, this is supposed to be support, not resistance. Same thing goes for support here, resistance here. I hope you get that. Now we now have the entering form, the sideways market, which is the uptrend. This is the uptrend, the downtrend, and the consolidation market. Now this shows that buyers are in charge because buyers keep breaking all barriers, and the barriers is all the highs. It keeps creating what we call higher high, higher high, higher high, higher high, higher high. And while the downtrend begin to create lower low, lower lows. This is a lower low, another lower low, another lower low, another lower low, another lower low. Why this creates higher highs, higher highs, higher highs, higher highs. Why they going to create two equal size? So there is no level of, no one is in charge. So they are both tussling with price. So it's more like a tug of war. As the buyers are pulling, the sellers are dragging within two same price. So I want to believe we get this now. Is that clear? So can I get a chat box? Are we still online? Okay, yes. So please let me know if that is understandable and clear, the chat box. Yeah, that's good. Okay. So that is more. That's that about that. I'm going to explain more. So having said that, we'll be diving in from next week to I think I've explained majorly on support and resistance, so we don't need to really do much. We understand the concept of support. So these are just graphical representation. So that's all about support and resistance. So these are just indicators, and I don't teach them Fibonacci. I know them, but if you want me to teach them, I can teach them. So if you want me to teach indicators, let me know. But I don't use them, and I don't want to suggest them to you. So, but if you want me to teach them, let me know. Mention the one Bollinger Band, Statistics, Elliott wave, moving averages, SMAs, EMAs, exponential moving average, simple moving averages. Mention the likes again. Fibonacci, which one again? Bollinger Band. What's this? What's this one? What do they call this one again? Yeah, this is Fibonacci. So some people use it in getting zones, but if you know ICT well, you don't need Fibonacci again. Um, I think that will be all for this. Yeah, so these are just support and resistance and all of those things. So these are moving averages. I used to use them at the beginning of the career, but then now not anymore. Not anymore. Now this is Bollinger Band. So this one, when I started my career, it was working for me. At some point like this, it just kept taking everything it gave to me. So it's crazy. So to this end, we form to today's class. Please, I would like to take questions right about now. So let's see what we have. Questions. Let's take questions, please. You can unmute yourself so I can hear you. If you have questions. Do we have questions? I'm very sure from next week or upper week we will start having questions. There is nothing in short. Well, that question should be should be a pragmatic question in the sense that trading Bitcoin is not. I'm not going to say it's not safe. Trading forex. I think that question should be: is trading forex safe? Of course, it's safe once you have the knowledge, because the knowledge of how the market works for every single market that has anything that is represented on the chart. Nasdaq, Bitcoin, currency, synthetics, anyone, mention the one you trade in. It is very safe once you have the knowledge. So the reason that does not make Bitcoin safe is because Bitcoin has a lot of fundamental influence that affects it beyond technical. There are times that you will do analysis set and good on BTC, before you know, you just see one crazy fundamental that will come from nowhere, by who God knows what caused it, and you just sweep everybody away the market, and before you know it, it becomes a story. Do you get that? So fundamentally, BTC is always manipulated. Like, I won't say manipulated, but it's always fundamentally driven most cases. So whenever you see BTC shooting up, it is not technical. It must be a fundamental influence. Like, there's a news I heard now about Bitcoin. They said Chinese, is it Chinese or Korea? Either of them, that they are presently going through a cyber, is it a cyber war, or a like maybe they launched a bomb within themselves, an internal washer that caused um all these hazardous, like they launched a bomb, nuclear. It's not like nuclear bomb. There's an internal war between them that is causing them to fall sick and all of those things. So one of which has been affecting the huge or big crypto guys in Asia, and most of these guys have been affected. And like I heard, they said these are the guys that are moving the crypto market. Yeah, so they said they have been affected. So it's possible BTC crashes. You get, but the fact that Tron is in power, Elon Musk is also having more medal to his power as well. So this could actually help BTC to um, gain the bit power. Like the way we do in Nigeria here, whenever the value of dollar is too much and all of those things, CBN will just look for one money somewhere, put in to CBN and put into Bitcoin just to ease naira from the dollar outbreak. Mostly maximum a week. After a week, it goes back to normal. So that's the way it works. So BTC is safe in as much as you are exposed to the fundamental that is pushing it, and you are conversant and updating yourself with fundamental events that affects BTC. So I hope that answers your question. So, and you can get yourself exposed to this with a couple of crypto guys and fundamental sites. You can check with them. You can check on them. I'll try and get them for you and drop it on the group on the bootcamp forum, so you can use them to run. See how far you can go. Do you have any other question, please? Yeah, you're welcome. Do we have any other question for quality there? So it's 1 hour 7 minutes already. So yeah, Farrell, go ahead, please. Yeah. Okay. All right, go ahead. Yeah. You believe it's what? Yeah, naked ICC. Every pairs. It works with every pairs, even BTC. It works with BTC. But the only time it does not work with BTC is when it has a fundamental influence. So it has to subjugate every technical influence and respect the fundamentals of that moment. So that is why I cannot technically tell people to rely on BTC technically. Be exposed to more fundamental with BTC. Like a couple of my friends were telling me that all the dollar pairs will fall this week. But I was like saying that with what I'm saying, it's going to buy. One, because we have a strong support on dollar index, sorry, a strong resistance on dollar index, which will cause dollar to fall and other currencies will rise. So sort of these things now. And one of the reasons of this is because of the fundamental influence of this man's inauguration. You get it? So that's it. ICT works for everything. Nasdaq mention it. So the only thing I can say ICT does not work for is the likes of maybe US oil, all these Norwegian currency, NOK, NKE, NKA, all those ones. I've never even opened them in my life. Get it? So for me, I just feel like if you want to be trading, the most important and as in the end point of trading is for you to have make money in dollars. You get it? So why should I go and trade the currency you don't know and that you don't know if it respects something and you have one that respects and you know everything. So just sit down with that and make your $10, $50 like that. Without because I have some people they will just open different currencies just because they want to know how the way it works. So by the time you want to do your back test with demo, then if it's beginning to work for you on demo, then come to your live and make the real cash. I hope that's answered the question. Yeah, you're welcome. Do we have any other question? Alright, in the absence of none, I want to believe Mr. Sampson is satisfied. Favor Omoloye. Okay, he stepped out. Sheo, how you doing, bro? So you might have to catch up with the videos on the classes we've had in the past. We've had 2 classes in the past, or 3. We've had 3, but we've been able to record. I wasn't able to record the first one. I recorded the third, second, third, and this is the 4th class, second week. We are going for the next 6 weeks. So this is the third class, first class rather. So all the videos will be available for watching by the end of today. So by God's willing, and we'll see how far we can go with that. Thank you guys for coming, and God bless you guys. Thanks for seeing you today, and have a nice day.